Today we are looking at unemployment rate news from both Canada and the US. And mostly, of most importance is from the US. Okay, those who trade USD card quite in between. They don't know how the volatility will be with the USD card. But for the rest of us that trade the USD as a base currency, then still it's of importance, one-sided importance. So we're quite safe. So, in the next like 30 minutes, approaching midday East African time, there'll be news which is orange folder news from the Eurozone, and that's about the quarterly change in employment and also Italian retail sales. These are orange folder news, so they don't necessarily they come with a lot of volatility in markets. So, guys, also today we are looking at the Bank of England Governor Bailey will be issuing a speech at 9 p.m. East African time, and most probably is going to address concerns about interest rates and and what it's expected from the Bank of England policies about interest rates. So the participation will be moderated, and the discussions will be about the future of the global economy. And the host, obviously, it's the Global Foundation from belonging to Adam Smith in Scotland. So, with regards to non-farm employment change on employment rates, the expectation is that employment is going down. That's the forecast from pundits in the financial markets. The expectation is that uh, there will be a decline in employment change in the US from like 115 last month or last reporting dates to about 90k, 80k, which will be a bad indicator for the US dollar, so base currency, in case the forecast comes in as predicted. Also, the rate is predicted to remain the same, which will be good for the currency. So that's like almost what we're expecting in today, and tomorrow is a weekend. So, and by the way, tomorrow we're having a meetup at Sarit Center. That's Empire FX. Will be having a meetup. Empire FX is having a meetup at Sarit Center, and it's about let me pull it up. Let me see. So FX is having meetup tomorrow. It's not posted in their Facebook, but they're having a meetup tomorrow. If you need information or education about the markets, then you're welcome. The morning session will be for beginners until that's from like 10 to 12. Then that's from like midday. Then from 1 to 4, then we're having an advanced meetup for traders. So let's roll up our let's roll up our charts so we can dive into the charts like immediately. Just a minute. Sorry for that. Don't know what's wrong with my charts. I just have it here. Don't think if I'm logged in, so bear with me. Bear with me, guys. Logged in to a very different account. It's not the account I wanted. What really happened with my desktop app? I don't know. I just can't tell what happened. It doesn't show. So let me try to sign in again. Sorry for these guys. So I got it. I just got it. So looking at our US 100 charts, in the Nasdaq, I had drawn this pennant or whatever people call it, where we are looking at prices going up. And actually, the last, like yesterday, the other on Wednesday, they on Wednesday, Nasdaq hit its all-time highs again, like for the don't know how 100th time or the fifth time this month, this year. And as a matter of fact, I'm still looking at a bullish moves. I'm still looking at bullish moves for the Nasdaq. I had indicated it the other day. Let me roll it down. So like it's what I'm the last 3 days the market and the Nasdaq has been selling, but still I'm still bullish for this Nasdaq. So I had pulled out fib extension tool, and it showed this is what I noticed. So the Nasdaq is here to hit 50% of its initial move, of this move from this position to this. So it's here to hit the 50%. So looking at this, like it's just like a little retracement, then it moves up. Like what happened here, it's exactly what's happening around this place right now in the last 3 days. So what happened on Friday, Monday, and Tuesday of May? That's uh, the towards the end of May is exactly what's happening in Wednesday, Thursday, and Friday of June. So now that we are expecting quite some news today from the US, and maybe tomorrow, Monday, then from Monday I'll be looking at buys more than sales towards this 50% uh, mark of the extension of the Fibonacci extension. So this is what I'm looking at, and today I'm looking at sales. I'll be looking at sales because the market is it's mixed up, and I'll be looking at sales maybe to hit this gap here. We have a weekly. I don't know if it's a weekly. Yeah, it's a weekly uh, open gap that was not filled. However, you should know that the US 500, that's uh, S&P 500, fill this gap. So the divergence in between the US 100 and the US 500 actually informs that it should not be necessary that US 500 fills up this gap. It's not so necessary that the US 500 fills this gap. 100, sorry, fills this gap, because the US 500 already filled this gap and moved upwards. Let me show you how it filled the gap on the cash based. Here it is. This gap was filled, just filled in here, but the US 100 never filled. But the divergence speaks for itself, so should be looking at higher prices all the same. So let's roll out down to the 4 hour. Do a Now that there is a low likelihood of price of US 100 filling this gap, in the 4 hour, marking our 2200. This is our 2200. I'll be waiting for this 2 and the 2 a.m. candle to close above this 2200 for higher prices towards this pennant. However, we like the other throughout throughout this week, we've had some couple of buys and sells. Yesterday I took a sell down here, and then uh, there's some people who took this buy, and it was a perfect A plus setup for ICT traders. It's also a perfect A setup for ICT traders, because you see trades were taken from this position, because you see around this place we have a value gap, an inverted fair value gap, and yeah, We have some sell side liquidity that was taken out um, from this was the London session. The London low was taken out, then it moved up and formed inverted fair value gaps that trade around this place towards these highs. London highs was a very good trade for most of the traders. This was an inverted fair value gap. The same note, I'll be waiting for trades today, mostly buys. I want this candle to close above this 2200. So we're in the London session. I want this to close above here. Now that we're almost like falling equal lows with the London session, I want it to close here so that on New York Open, we should my expectation would be that London goes up. Okay, this is yesterday's 2200, so you should just ignore it. That on New York Open, we take out Tokyo High, come back to this 2200, then look for higher prices. That's what I'll be looking out with NQ or Nasdaq. So let's see gold. Gold gave me some money and took it away. I rarely trade gold, but it's a choppy market for gold. But we're looking at lower prices. I bought around this place, made some money, but this low prices took out the my profits. So I once again hung my boots from trading gold. So from trading gold on a daily, we don't see a perfect move, but we can see that it's trying to sell most of the time. Sorry, it's trying to sell most of the time on a daily time frame. Even on a weekly, it's majorly a sell. But let's see if we can note perfect scenario for buys today. Yeah. So it hit on a weekly, the weekly we have already hit the 50%. So maybe we are looking at higher prices today. Yeah, today we might be looking at higher prices or lower prices to take out um these are doji candle, weekly doji candle. In the 4 hour, in the 4 hour time frame. So we took out these equal highs, then prices moved down, taken out this swing low, and we have an inverted fair value gap around this place that was um fulfilled or filled up. Then we also have an inverted fair value gap around this place. Let me mark it out so that we are on the same page. An inverted fair value gap is also seen here where we currently have the prices. So this is our 4 hour inverted fair value gap. That prices are reacting from. And let's see if we took out any. Yeah, we just no, the prices are yet to take out this swing loss. So I think I'll be looking for sales today as well. We just have like 5 minutes before this 4 hour candle closes. So let's see. Let's see what. Okay. Trying to draw. Let's see if we can draw. These are a higher high, lower high, lower high, uh, higher, higher low, higher low, s- lower low, sorry. So overall, we are looking at, generally, we are looking at cells, and this is our range. So let me pull out our range. Okay, this range has been invalidated, so we have another range here. We are the 50% mark of the range. Inversing this, then we'll be having, let's inverse this Fibonacci and we'll see what we'll be having. Okay, we are going down, guys. We are going down with gold. So I'll be taking more sales with gold and buys. So once we tap into, let's say if we have a PDRA around this place, we'll be going down. That's my expectation today, that gold will be selling because we are the 61% of the range. So yeah, I'll be looking for prices to tap into this order block. We have an order block here. So once price taps here, we are looking down. So I take a sell right now, and my target will be these swing lows, so that we invalidate this inverted fair value gap that has been tapped into already. Like here, we have tapped it here and here. So that will be my trade, and my stop loss will be around this place. Also, let's see if SMC works here. Okay, we have these, and actually kind of makes sense that we can take a trade now, and this will be our stop loss. So it's a short position, not a long position. Take. So let's see what RR this would be. That would be like about 2 RR, quite a good reward ratio, risk reward ratio. Also, we can have price coming up now that we already have the fair value gap. The prices can, another scenario is that price comes up, takes these highs, comes down back, and we get outside this zone. That's also a possibility. So just watch out and be vigilant with these markets. You never know what's happening. Okay, let's be quite certain on a higher time frame on what we're expecting. So I'll just go back to our 4 hour time frame and try and see what we really looking at. What is this that we do here? Oh, oh, this is a monthly fair value gap that they drawn earlier. Okay, makes sense. We might be going down on a weekly, on a monthly actually. Yeah, we might now that gold had hit its all-time highs in January. We might be going down on a monthly, weekly, and even today. So yeah, I'd on an on, I'd still stick with sales today. So yeah, that's what I'll stick with. I'll stick with sales. I'm not into buys for gold. I'll stick with sales today. Let's look at Dow Jones. So Dow Jones is at its all-time highs, and as expected, I had drawn this. It hit the daily fair value gap. Then I had drawn this earlier, showing where I'm expecting price to come up to this 52, 460 something, 465 as the final price. I had drawn this using our extension tool, and this is how I did it. Now we had this move from here to here. It's a sharp move, so having our extension, we want to see. Wow, that's it. We want to see how much of a move these Dow Jones will be making in the next rally. So I drew this, and the expectation we are already done 50% of the move, so we are targeting 100% of this move here, and that will be 52,495. Now it looks like the markets are quite confident that everything is good and the economy is good. That's why we are seeing this move. And this 2200 candle is quite a small candle, yeah, implying it implies that markets are moving higher and higher with the Dow Jones, this small 2200. Let me show you how small it looks. It is this one. So we're expecting price to go higher and higher. So let me take a trade on my evaluation. The Dow Jones. Okay, hold on 15 minutes. Oh, sorry. Hours. So this candle might get done. Then prices. That's my expectation, my observation. I've been observing these markets. So the next candle will come here, then go back up. So our stop loss should be around this place and target an RR of 2. So that's like Dow Jones indices. We don't have Dow Jones. Oh, ooh, cooked. Let's see. Yes, 30. I'll trade through them. Stop loss. Stop loss shall be 51,583. Just like about $250. My take profit should be $500. That's 52. Sorry, 51,709 plus 300 plus 200. That's 5,200. Yes, 5,200 is enough. 52,000. Sorry. I mean, so that's my trade. So that's all, guys. Thank you for tuning in. Um, I really don't see if these news today are going to create a lot of volatility, given that Trump is still having bugs and forth and bugs with Iran, because that's all that matters right now in the economy worldwide. So I don't think this. Oh yeah, okay. Someone might argue that it's Kevin Walsh first address and like a job in the Fed, but in the bank, but I don't think if it makes a lot, it actually means anything other than the war in Iran and oil and the blockade and everything, and Trump. Now that Trump is also threatening to invade Cuba, they have actually sanctioned the Cuban president. So I don't see a lot of volatility created by this. Anyway, I'll be hanging in and let's watch the markets. I wish you well. Have a good trading day. Bye, guys.